All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Market's been open here for about an hour, and it's slightly in the red here. And let's go get to it and take a look at the challenge and what's going on with that. No new signals on the board here this morning. I'll show you the crossover scan, so nothing to go and get into. We did see Alcoa trigger yesterday, and that is still something that could go get into today. Providing we have the cash, but we'd have to free that up with Walmart or Microsoft, and both are coming into their time stops here today. Well, excuse me, Walmart is. These are the prices that were just before I started video, and we're up $100 on Walmart, up 75 on Microsoft. Let's face it, they just simply haven't, the options have just simply not gone anywhere. They've had small gains, they've had small losses, but overall just really haven't ticked. And, the stock price is higher by more than $1 on both of them. In fact, with Microsoft, the stock's almost $2 higher, Walmart almost $1 higher. But neither have moved even a single average true range or are sitting a single average true range beyond what we entered them at. So we're not going to see any sort of real option appreciation in that scenario. Here we are. Auto exit date green is today for Walmart, but in the afternoon session, so I'm not going to pull it right now. And then for Microsoft, it's tomorrow in the afternoon session. Now, Microsoft opened up pretty weak here this morning and fell. It's a little bit off its lows, but Walmart is being affected by an Adobe downgrade. And Adobe was downgraded this morning, and basically for their 2020 earnings outlook. So the analyst was concerned that in 2020 next year, the earnings outlook was not going to be as favorable for Adobe, and it's a valid concern. It's a valid concern that analysts have on many stocks, and that as we go through this earnings season, what do companies project for 2020 is a big deal. Is something that I think is going to be the crux of what earnings season is all about. We see the analysts downgrade that. Again, these aren't Adobe numbers or not statements from Adobe, but definitely weighing on Adobe and, affecting Microsoft and some of the other cloud stocks, here with that. It'd be nice to see Microsoft shake that off and push on back up above yesterday's highs. But we'll see how that plays on out here. Walmart was a bit of a laggard yesterday, and not really doing much here today, either. It has been pretty stuck here, just shy of 120, dancing around the 120 area, and we will need to see a pretty sharp rally into the close to be able to hold that. All right, so not making any changes here, but as we get into the afternoon, if Microsoft pulls back a little bit more, I'd probably have to exit that in Walmart, barring some sort of, I think we need about $1.50 to $1.80 rally, somewhere in that area. Then I will be pulling that position off the board. Now, scans here, the bearish scan or the downside crossover scan, we have two on the list here, Twilio and Vale. Let me show you both of these. Here's Twilio. And this is also, a stock that is affected by that downgrade for Adobe. This is a stock that, I'm very bullish on longer term. It's one that had a nice little upside crossover, but wasn't enough to trade there. And one that has a downside crossover here on it today and could trigger bearish fairly easily. So, very interested to see how that, how that shapes up here. It's one that I'm not sure on the options. Let me pull the options up here real quick. They're probably going to be a little too bright. No, they're okay. they're okay. They're not horrible, but they're not the best. But definitely still tradable. And then the other one was Vale. Now Vale is one that had a nice upside crossover. We got kind of a 1 day pop on it, and then it is pretty much bled here since. Has that downside crossover on it, but consolidation risk component on it is very high right here. Some of this is kind of being affected by the drop in U.S. steel here today. But when we look kind of across the board, BHP Billiton is a little bit weaker. Rio Tinto, a little bit weaker. These iron ore stocks are all kind of in that same weaker position here, here today. Now on the upside crossover side here, let me pull it up. We have Disney. Now, Disney was on the upside crossover list yesterday afternoon, but then sold off into the close. It's on the upside crossover list right here, but consolidation risk component on it is very high. It's not something that I'm going to have a chance to get into right here for the challenge. Regardless of where it closes here today, it's one that's finally has had a nice pullback, right? We talked about Disney. Back here in April on the big gap up, and I mentioned that, the long-term position that I had that I bought and started building when my daughter was born way back in 2007. I closed it. I pulled it off. I said enough's enough, and I'll be looking to get back in. Now, Disney continued to rally, pushed up to 144, and I know, okay, they're going to come out with their streaming service, and everywhere you looked, everyone was positive on Disney, but it's finally had that pullback. It's back here into this 130 area. There are some competition concerns now out there, right? With same thing with Netflix and all of that, which personally I think is pretty ridiculous. When you talk about Netflix and Disney and the competition between the two, they're not going to hurt each other. They're going to benefit each other. And, who's it going to hurt? It's going to hurt your box cable. It's going to hurt your satellite, providers when it comes to that digital media. Just one where over time, Disney's going to be a big winner. Netflix is going to be a big winner. But when it comes to the market, a lot of times they can't look past, the immediate, and that's kind of where Disney is right now. I'd love to see a little more dip on Disney to get back in, longer term, but we'll see how it all plays out here. No new signals here for the challenge. Holding on to Walmart, holding on to Microsoft, but we'll need to make changes here to them, going into the close here today, or at least to Walmart, as Microsoft sits, presently, would not have to alter and adjust. Now, I did get forwarded a message here from Michelle, and it was a very interesting message about Hindsight, and I figured I'd make a couple comments here on it. But basically, for a while there, I think about every other video, I was addressing some sort of Hindsight issue. And it was something that, I looked at and, talked with Michelle, Jason, and a few others about, how do I handle it? Because the bottom line is, when it comes to trading in the markets, Hindsight exists. Hindsight's 2020, and Hindsight is worthless. It brings no value to the table. It doesn't help anything. And one of the elements built into the challenge algorithm structure is it doesn't give room for Hindsight. Right? Yeah, a little bit, right? But in general, it doesn't give any room for it, right? Why am I not in Bank of America? Well, it didn't trigger. And so it's not like I have to sit there and go, well, what did I miss? Should I be in? And blah, blah, blah for the challenge and all of that, right? It takes it completely out. The other thing is about 95% of Trader Minute community and members, historically, they get it. When it comes to Hindsight, they don't want to talk about it. It doesn't mean a whole lot to them. They understand it's real-time, real-world market, and Hindsight brings zero value. So it's, pretty much just kind of speaking to a very, very few, who live in that Hindsight world. And it's a world that we all dip into from time to time, but it's a world that, provides very little value. And when it comes to hindsight here, we can look at something like a Microsoft, and I can say, well, had I chosen a different option, had I done this, had I done that, yeah, it could be different. But bottom line is, it is running with the challenge format, and will continue to run with the challenge format. Why? Well, because the challenge format over time has proven itself out in a very strong way. Sure, there are times where things can be better. Many of you know that I'm doing my own personal challenge, competing against the algorithm. Last challenge I lost. This challenge I'm beating the algorithm, and I'm beating it soundly. But over time, probably that won't be the case. But I got lucky with a few things, and it's just one of those where I'm not going to bring it in because of it. I'm not going to make any changes because of it. But the biggest issue when it comes to hindsight that and the challenge algorithm isn't a Microsoft and the handling of it, or a Walmart, or any of that. It's when we look at something like a Caterpillar, and I do this too, and man, sure would have been nice to be on these two big pops, right? Would sure have been nice to be on this pop right here. Would sure be nice to be on this pop right here. And, neither of them triggered. In fact, back here in June, we didn't see it trigger. We have seen some very strong trends on Caterpillar here over the course of the last 6 months, where we didn't get challenge triggers. And, so I look and I go back and I say, all right, should it? Well, the reality is, the challenge triggers are built not to trigger on these. Not to trigger on these moves, and for a good reason, because historically, yes, we do get these, and when they happen, they're very strong, but a lot of times they do turn into something like this, which completely clobbers the option and completely takes the option to zero. In fact, having the option go to zero is a lot higher risk when, playing a bounce off of a new low. And so, I go and I look at it, I say, well, can we incorporate it, blah, blah, and, the reality is, yeah, we could, right? We could tweak the parameters just a little bit to do it. But the accuracy would go down, and, it's one where I will continue to kind of just let some of these things happen. When they signal, I'll go trade them. When they don't, I won't, and continue to manage it that way. That said, I do show the 3-7 crossovers each and every day. Feel free to go out and trade them, as you would like. But I hope you do see that as the markets chop, as stocks chop, those 3-7s, they flip-flop. They flip-flop a lot. And, there are times in the market where we're going to get, some more consistent, stronger trends. And there are some times when it's just, they're not going to materialize in the same way. And of late, top performing stocks, or stocks that aren't near new lows, they just haven't really had some of the stronger trends associated here with them. We have seen a few, like something like a Walgreens that triggered for the challenge, wasn't able to trade it because, cash tied up. We've seen that trend start to materialize here. We'll continue to see stuff like that, but in all, we'll continue with the challenge process and, run with it. And as, it only takes one or two, pretty decent ones to really put ourselves in a really good spot. And, we'll continue to trust and rely here in that. All right. So hopefully that helps, in terms of that, looking at, kind of woulda, coulda, shouldas, and, kind of my take on it. You won't hear me talk a lot about woulda, coulda, shouldas going forward. I haven't talked about it very much in the last month. I won't be talking about it very much in the coming months. And but every once in a while, I will bring it up, as I do know that it is a real element when it comes to trading, for some of us out there. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.